Joining us is Jeff Currie. He's the Chief Strategy Officer of Energy Pathways at Carlyle. And Jeff, I think it's important to highlight at a time when a lot of other folks expect or think the oil price is going to be where it is, a little bit lower. The administration's pushing it that way. I mean, you're warning the price should and could start to go much higher. Is that right?
Well, I think the market has gone up, $3 yesterday, another dollar today. But let's look at gold. Gold is, testing new highs. I like to point, as you said, the fundamental impact is relatively modest on Venezuela on oil. But the situation in Venezuela and the impact on geopolitical risk is very large. That's what gold is telling you. For oil importers, whether you're China, India, or Europe, the world got a lot more dangerous to now. And part of, the risk that you have in that bear view that everybody has is predicated on this big oil supply glut. It's a bunch of floating oil at sea in like the South China Sea. Now, if I'm China, I'm looking at what's happening with these dark fleet ships being, confiscated, outside of the Caribbean. There's a high probability that China just goes in, mine, and just takes all of that oil. Why wouldn't they, with the risk right now
Whose oil
of
is it?
seeing disruptions to their supply so high?
So, and I've heard this, and many people, we've talked about this, Amrita Sen, Halima Croft, Peter Bookvar, this idea that the market sees a glut of a couple million, I don't know how you describe barrels a day or barrels in general, this year, and is therefore keeping the oil price down. But more and more people are saying, no, but that glut is only in ships that are on the sea. You're saying they're near China, and China could just take it.
Take it. Most of those ships are dark fleet ships anyway. They're already Chinese insurance, Chinese payment systems. So they're either Russian, Iranian. Part of what, when we look at Venezuela, it was in the crosshairs of Iran, Russia, and Venezuela. And there's a lot of issues there from a geopolitical perspective. But I think going back to when we look at the oil market in that surplus that you're talking about, the short in the market now is bigger than that excess floating storage, and most of it sitting outside in places like the South China Sea. So you're looking at that going, what are your relatively risk? I like to point, you got a record short, demand is holding up, and geopolitical risk is quite high. That's a recipe, for some potential upside movements in prices. And again, the market has moved a lot recently.
It has. It's moved $5 since you and I spoke about this. I mean, what about the idea of fundamentally the supply and demand situation? I thought it was that we were oversupplied for a variety of. You can go through country by country. Demand is whatever it is, and there's like a structural oversupply that just kind of we work through by 2027. Is that not the case?
Well, I like to make this point, is if you're having to scrape the data to find the evidence of your supply glut, it's not a real supply glut. I've lived through them, and Kelly, you've been through them. These things hit you over the head like a sledgehammer. You don't have to go through the data and try to find them. Prices would be collapsing. The front of the curve would be hit hard. Inventories would be swelling around in here. And let me point this out. Inventory tanks sitting on land are the cheapest ones out there. Keeping oil on a tanker is the most expensive out there. If you were doing storage arbitrage and building inventories because of a glut, wouldn't you be putting it in the cheapest tanks in the world and not the most expensive ones?
And not just.
So there's a lot of problems here. Your market is backwardated, doesn't pay for storage. Your refinery margins are elevated. Physical grades are relatively strong. And so when we look at the downward movement in price, there's 230 million barrels of shorts out there. I'm not going to say I know better or anything like that, but you got to look at all these flags and ask, hey, what is this thing flashing? And let's look at gold sitting there going, hey, geopolitical risk. You got Iran, you got Russia. There's a lot of risk out there, and having that big of a short with that type of risk, I think, is quite dangerous.